Hey, what's up, guys? What's up, Elite Team? Mark Andre here, coming to you live. This is going to be a recorded call. I'm going to post the recording link onto the Facebook page, so if you don't happen to get on this call, no worries. You can just click on that recorded link, and it's going to take you straight to a YouTube video. And hopefully, we're not going to take too long before everyone else kind of hops on board. I know a couple of other guys were waiting to get off work, so we're going to wait for them. So before that, and until we actually get started, we're just going to talk. We're going to ask some questions. We're going to just have a good time and really bond as a family. So if you're watching the recording, you can just skip over the first couple of minutes until we actually get started, all right? Today we're going to be talking about a couple of things, some tips that I have for you guys, some strategies and some tips, as well as we're going to talk about the step-by-step six-figure plan that I kind of wrote for you guys and posted on the page. And we're also going to break down the charts. So pretty cool stuff, not going to take too long, so this is going to be that being said, though, guys, did y'all have any questions that are already on this call right now?
No.
I can't think any on top of my head.
No worries, man. That's good. Well, how was everybody's weekend?
Relaxing.
Full of homework.
Yeah,
Good.
homework too. Yeah.
Yeah.
Nice. Awesome, guys.
50% done with those 4 webinars, so.
I told you, man, they're long. They're in-depth,
Yeah.
and they're long. They cover a lot of stuff, man.
Yeah.
So, yeah, I mean, the fastest I've ever gone through for those 4 webinars, probably like a week and a half, maybe 2 weeks. And that's the fastest, just because there's just so much knowledge that Steve is just dropping on you. You know?
Yeah.
But it's good stuff, though. I hope you like it, man.
Yeah, I'm pretty excited. I thought I was going to get done this weekend, but like you said, it's just a lot of information.
Yeah.
You have to watch some of it over again, so, I didn't want to skip over anything.
Definitely. And he is one of the top Forex coaches in the industry, so he does know exactly what he's talking about. But then again, what I like to do is I like to take bits and nuggets from, top Forex traders and top Forex coaches and just kind of combine them all together, throw in my little pizzazz in there and make it my own, kind of like form my own trading style, if you will. And I feel like that's what really we should all be doing is, even though I have my own way, take a little bit from what I'm teaching you guys and take a little bit of what I'm saying and kind of like make it into your own little trading style, just because that's just going to take you to that next level, because for me, I really personalize it to myself. So I really understand what I'm talking about. I understand the indicators that I use, the main ones that I use, and so on and so forth. And so for you guys, you might not have that same style, so just personalize it to however you feel like you're trading the best to your abilities and just perfect that style. All right. Let's see. What's up, Ryan? How's it going, man?
It's going good.
Good,
Well, I
good,
asked
man.
you
What's that?
with the future father-in-law for 4.5 hours.
Bro, that's
Yep.
insane, man.
Well, my fiance had her first baby shower tonight, so we got a couple $1,000 worth of baby stuff. So
That's good stuff, man. Are you like just throwing it into one big old room or what?
She has a spare bedroom at her parents' house. So, we've claimed the baby's room, so pretty much in there.
Awesome. That's awesome stuff, dude. Are you excited?
Oh, I can't wait. She's just been growing like crazy. We don't know if it's a boy or girl, but fiance, her belly looks massive. It's gonna come out straight up flexing.
Dude, that's insane, man. Well, congrats, dude. I'm
Nice.
pretty excited about that too. Later on, not now, but later in my life, that's it's a pretty big thing, So
Oh yeah, the whole thing is.
the big
I'm actually
responsibility.
we're looking up our wedding shit where we want to do it, and I looked up Atlantis in the Bahamas. Basically, for
Nice.
$30,000, I can do a wedding or like an oceanfront wedding in the Bahamas.
Dude, that is nice, dude. I've been there once. Not Atlantis, but the Bahamas. The water there is just insane. I like it better than Cancun. So
That's what my buddy that's from Barrington. I don't know if you know where Barrington is. Zevin knows where it's at. That's like our high-end area in like the Midwest. and he was in the Bahamas, and he was just telling me a story about how he slept with some mom and then slept with her daughter in the same day.
What?
He also,
Wow, man, that's
yeah, his dad's got some sick toys. He put up a picture the other day of him driving his dad's Aston Martin.
dude, I love Astons, man. They are beautiful.
Yeah, his dad traded in his Z06 for it. I don't know if you guys can see. That's the picture from driving it.
Nice. Wait, what
Cool.
kind of Aston is it?
Vantage GT.
Vantage GT? Nice.
So it's like one of the cheaper ones, but his dad said he made money on the Z06 trade-in. And I think his Z06 was pushing 200,000.
What?
Yeah.
That's insane, dude. Dude, Zero Sixes, man, are one of my favorites. Like the new ones, the new Stingrays. Dude,
Oh God,
they are
I mean,
just.
it's stupid. I mean, it's a supercar. I mean,
Yeah.
same as a Lamborghini. It's just not the name.
Yeah, it's just the name, really, man. 650 horsepower, 650.
His dad said 750-ish.
Yeah, was it a Hennessy or was it just custom?
I don't know. He couldn't remember. He didn't get to drive it much. The one time he did, he took it 220 miles an hour down I-90.
Wow, that's insane, dude.
Yeah, that's what I said. I was like, yo, fuck that little thing. You turn
That's insane.
a little bit too sharp, done.
Yeah. Oh yeah, dude. If you hit like one little rock chip, you're done at
Yeah.
220. Ooh.
Yeah. So
I want a bike, but I don't think I ever will, man. Those things are just dangerous. You just hit
everything
one
I ever
pothole.
drive, I take to the max. Whatever the speedometer says, I'll try and max it out. So I know if I get a bike, I'm not gonna go. I'll probably get if I were, I would probably get an R1, and I know I would kill myself. I mean, first gear and then it's up to 100.
Yeah, those things are just ridiculous fast, man. Just ridiculous.
Yeah.
But so yeah, guys, markets opened back up a couple hours ago. So I don't know if you guys are trading gap, but do you guys know what gap trading is?
No.
Okay. For those of you who don't, whenever the markets open back up on Sunday, depending on news, depending on technicals, depending on a bunch of different stuff, the markets might, it's not always, but sometimes they actually start at a different level than whenever they closed off on Friday at 5 p.m. Eastern Standard Time. And the difference of the opening and closing of those charts is what we call the gaps. And so right whenever markets open at 5 p.m. Eastern Standard Time on Sunday, we just look at the charts and see if there's any gaps, because what we have experienced through our trading journey is that markets always close gaps. It doesn't have to be right away. It doesn't have to be after the 15-minute candle. It doesn't have to be in a couple 15-minute candles, but sooner or later, the majority of the time it is after the first couple of hours, but they do always close gaps. And so I did catch, I think, 30 pips in the first 30 minutes that market was open, just because I traded, I think it was the Euro gap, the NZD gap, and another gap that just closed right away in the first 30 minutes. So it's something that we can all just make really easy money right at the start of the market session, right at the start of our week. So really something to really look forward to. You know, on Sunday we know it's gap time, so we just look at the market, see if there's any gaps. All right. And so actually, if you guys want to, I don't know if you have MetaTrader 4 open on your laptop or on your phone, but you can just go and look. Actually, I'll do that right now too on my phone. So yeah, I caught 30 pips, Euro USD, GBP USD, and NZD USD. So the Euro closed, I think, closed up. Yeah, the Euro closed up.
Euro.
And the GBP closed up as well. And NZD closed up as well. I don't know if you guys can see that, but I'm looking at the 15-minute candle chart, and it's about 10 or 12 or so candles ago. There's a pretty nice, again, just 10 pip gap, but then again, guys, it's 10 pips. So if you found 3 charts or 5 charts with a 10 pip gap, we know that they all close. That right there is just an easy 30, 40, 50 pips. And that's a solid day right there whenever we're looking at a 50 pips a day target. So always keep that in mind, guys. Sunday, whenever the market's open, look for gaps. Okay, just easy money. So that was pretty cool. This week is going to be a very huge week. I thought last week was going to be a very big week, and it was a very big week, but this week is going to be very close to last week, if not even bigger than last week, just because the U.S. market has given a lot of stuff the past couple of weeks. I don't know if you guys have noticed or not, but it's steaming right now. So be looking for reversals. I think the euro is going to rise again tonight, but it's going to drop either tomorrow or the day after that or sometime soon. It's going to drop, and it's going to drop hard, so just watch out for that, guys. And as well as all the other USD currency pairs as well. All right. So yeah, I mean, I guess we can get started right now. Joey's on, Moosa's on, Ryan's on, Steven's on, Zevin is on. We can wait on a couple of the guys, but while we wait, I guess we can just talk about some tips and some strategies that I wrote down for you guys, just to better understand what we're doing. I mean, we all know what Forex is, the foreign exchange market, right? We all know that whenever you buy or you sell a currency pair, that means that you're betting one pair against the other. So like if you're buying the euro versus the US dollar, you're betting the euro is going to rise against the US dollar, right? If you're selling the euro US dollar, you're betting that the euro is going to drop compared to the US dollar. Okay, so it's just basic stuff, guys. Whenever I was talking to one prospect over the weekend, he was like, "Yeah, well, how do I open my account with only $100? Because in the foreign exchange market, $5 trillion a day, more than that, on my $100 account is really nothing compared to banks and other traders that have millions and millions of dollars." And that's why we use leverage. That's the awesome thing about online Forex trading, is that we have leverage. The only bad thing about that is if we live in the U.S., our leverage is limited to 50 to 1. So that means that every dollar that we put into our account, our broker is going to match that with $50. Okay, so if we live in the United States, it's limited to 50 to 1. There's ways around that to where actually it's on the hush-hush, but we can actually go to an international broker where the limit to that is maybe I think it's 1,000 to 1 or 500 to 1, or depending on the broker. And we actually, what I recommend for you guys and what my mentors recommended to me is a leverage of 1 to 200, meaning that every dollar that we put in, they match it with $200. Okay, so it's just think about it like a loan from the bank, except it's from the broker. Okay, and so that's how we can actually trade with just $100 or just $500, because in reality, whenever you put down $100 with a leverage of 200 to 1, that's, what is that, $20,000 instead of just $100. Is that right? Did I do my math right? 2,000, I think it's 20,000. Man, I've been off of school for too long. This summer has been way too long. But yeah, guys, so if you want, you could open up a piece of paper with a pen or pencil. I'm just going to go over some pretty cool stuff that you might not have already known, and it's going to help your trading out pretty significantly. Okay, so again, this is just some basic tips, some cool little knowledge, some strategies that we can all use to better our accounts. Okay, so PIP, you guys know what PIP stands for? I know we all know what it means, just one increment in the market whenever it moves, just like the stock market is measured in cents. So, Apple moved 10 cents, it moved down 5 cents, whereas in the foreign exchange market, it moves up in pips, it moves down in pips. But do y'all know what an actual PIP stands for? Like, what does PIP stand for?
It's the fourth decimal place.
Well, yeah, it's the 1,000th place in a currency pair. But PIP actually stands for percentage in points. That's what it actually stands for, PIP, percentage in point. Okay, and it is 1,000th of a penny.
Yeah.
Okay, and so the cool thing about this whole trading foreign exchange market in the actual online Forex industry or online Forex world is that we are able to control the amount that we make in our trades by using lot sizes. Okay, and lot sizes are in our control to an extent, because again, depending on how much money we actually have in our account and the leverage that we have on that account, our lot sizes are going to be limited towards that. Okay, so really quick, just to break it down to the three basic lot sizes, we have a micro lot, we have a mini lot, and we have a standard lot. Okay? A micro lot is the same thing as buying $1,000 worth of a currency pair. Okay, so it's $1,000 of buying power. The mini lot is $10,000, so it's $10,000 of buying power of whatever currency pair that you're trading. Okay, and a standard lot is $100,000. So you actually, whenever you put down one standard lot of the Euro USD, you're buying $100,000 of the Euro USD. Okay. So in other words, the micro lot, whenever you enter it into an actual lot size, it's 0.01. Okay, that's the actual size of a micro lot. The mini lot is 0.1, so it's 10 micro lots. Okay, and the standard lot is 1.0, or it's 100 micro lots and it's 10 mini lots. Okay, so I hope that makes sense to you guys. You know, whenever you place a trade, 0.2, that's 2 mini lots. Whenever you put a trade of 3.0, that's 3 standard lots. Okay, and what does that really mean? Well, in order to open up a micro lot, a mini lot, or a standard lot, like I said, it really depends on how much money you have in your account and the leverage that you have in your account. Okay, but let's say we're not talking about leverage whatsoever. Okay, because maybe you have 200 to 1 leverage, maybe you have 1,000 to 1 leverage, maybe you only have 10 to 1. Let's take away leverage for this conversation and talk about the actual money it takes in order to open up a trade with a certain lot size. Okay, so in order to open up a micro lot, you need $5 of real buying power in your account. Okay, so 0.01, in order to place a trade in the market with a lot size of 0.01, you need a buying power of $5. Okay, whenever you place a trade for a mini lot, so if you want to place a trade with 0.10, you need $50 in your account. Okay, this is without leverage. So real quick, my messages. Okay, and for a standard lot, to place a standard lot 1.00, which is 10 times the mini lot, 100 times of the micro lot, you need $500. So you need $500 in your live account in order to place a trade in the market with a 1.0 standard lot, just one. Okay, so now you can actually see a better picture of, okay, well, what lot size should I put down in my trade? Well, how much money do you actually have in your account?
What was the mini? I froze up on it.
Okay, yeah, a mini is you need $50 to open up a mini lot size.
Okay.
Definitely. Okay, so with that, we can talk about a lot of different stuff. We can talk about risk management. You know, depending on what level of risk management you have on your account, 10%, you're risking 5%, you're risking 1%. A lot of people, they have those 3 numbers in mind. Okay, well, how much should I risk? 1%, 5%. I should risk 10%. It really depends on you, depends on your confidence level, depends on your knowledge in the market, depends on how much experience and practice you've had. For me, I think 10% or below. So that's all 3, but it really depends on you. At first, obviously, I was starting out with 1%, 0.1%. No, I'm just kidding. I was starting out with 1%, building up to 2%, 3%, 4%. Right now, I'm around 8 to 10%. But I don't advise you guys to risk more than 10% of your account and your trades. For obvious reasons, if the trade doesn't go your way, it wipes out your account. Okay, and that's another thing to talk about too. Whenever we have this goal in mind of $1 million, or if your goal is 6 figures, so $100,000, and you're obviously starting at 0, right? Whenever you open up your live account, and you just picture like this straight line to $1 million, or a straight line to 500K or 100K, whatever like that. It's never like that, and it's never like that in life. And so I want you guys to think about this in a more realistic way, not in a negative way, but more realistic way. So it's I've wrote it here. What did I call it? I called it something. I forgot what. But instead of thinking about it just linearly, think about it as you make a good day, right? You have a good day, you make some good trades, it goes up a little bit, and then it brings it back down because you lost some money. There was a bad trade, something happened in the market, whatever. So you lost a little bit of money. You brought it back up, you made some more money, and it dropped again. Maybe you made a little bit of money and it dropped a little bit more than you wanted to, but then it brought it right back up the next day or the next week. Okay, and it slowly goes up just like this. It's like a little heartbeat sensor or something like that, all the way to your goal. And that's what we're looking for. Okay, because if we're picturing a 0 to 100K in a straight line just like that, it's never going to work that way, and you're just going to get disappointed because the 1 second that you lose money, that you lose a trade doesn't go your way, not only does that break your account, but that also breaks your mindset, and you're going to want to quit and give up and go back to your 9 to 5. And that's exactly what we're not wanting to do. Okay? So I want you guys to think about it as a more messy, I forgot the word's going to bug me, but a more messy chart, but we're still going to achieve our goal. It's okay to mess up. It's okay to lose some money. It's okay to lose some trades. But the thing is, we have our risk management in place to where we're never going to go down. We're never going to close out our accounts. We're never going to lose a significant amount of money because we have our safety nets. Okay, does that kind of make sense to you guys?
Mm-hmm.
If it doesn't, just... Okay, cool. Where was that? Equity curve, right? Man, brain fart. So exactly, just what I was saying. You know, we need to take our losses, but we also need to show discipline. Okay, so if we do make a loss, you know, take a trade, we lose some money, we need to show some discipline, some maturity, and say, you know what? It's just a day in the market. Something happened. Hopefully, you guys have a trading journal so you can write down your trades as well as your thoughts while you're taking those trades, so you can look back and just see, okay, what went wrong? What happened here? Was I thinking like a retail trader, or was I thinking like an actual market maker? Okay, and by doing these steps, you're going to grow your confidence, you're going to grow your maturity level, you're going to grow your discipline to where your equity curve is going to continue to rise. You're not even going to worry about the days that you lose money because guess what? We know that it's going to increase and we're going to hit our goal. Okay, and that's exactly what I want to talk to you about after this whole little spiel, the step-by-step, six-figure game plan. So hopefully you guys have opened that up and looked through it, got super excited about it. If not, go through the Facebook page really quick and just click on the Excel sheet document. Just have it open on your computer, guys. If you have it on your phone, great, cool. Actually, I printed it out right now. I have it on my desktop right now. So you guys can just open that up right now too. But there's a couple rules that I wanted you guys to understand. And if you guys utilize it in your trading experience, great. You don't have to. Again, this is just my trading style. But if you do, more power to you. Okay, because this just helped me grow as a trader. And I feel like they're pretty necessary. But one of the most important rules that we need to consider is we should never predict the market. We should never think that we can see the future. Okay, because if we think that we see the future and we're wrong, like I said, it's going to burn our butts, right? We're going to lose a lot of motivation, a lot of drive, and we're just going to bail and quit or whatever. So instead of thinking that we see the future, we need to understand that we're human beings, we're learning, we're beginners. No matter if we're at $100,000 or $1 million, we're beginners. Okay, so we shouldn't have a huge ego, and that's really one of the biggest rules, to leave your emotions away from your trading experience. Okay, because if you're having a bad day because of work, because of your girlfriend dumped you, because of this, whatever like that, you're going to go into the market, you're going to trade, not going to go well, and you're going to be very disappointed, right? And it's going to go, this is just going to be like a tumbleweed, or like a little ice ball going down a mountain, right? It's just going to grow bigger and bigger and bigger. Instead, take your emotions out of your trading world. Okay, you want to understand that this is a business. This is a very risky business, but we have the power and the tools in order to win this business every day, or this puzzle. If you think about it like a puzzle, we know the instruction manual of how to solve this puzzle every single day. Okay, but we need to think about it as if we're the beginners. We're on step one, and we never understand what's going to happen on the next step. Okay, for a couple of reasons, but you'll see in a second. So the number 2 rule is cut your losses after 10%. Okay, and this is another safety net I was talking to you about, using take profit and stop losses, cutting your losses down after 10% of your losses, or sorry, of your trade. Along with that is never marry your trade. And what I mean by that is you put in a trade in gold, XAU USD, and you place a buy in gold, and it drops significantly, and you're like, oh crap, I'm going to lose a lot of money. my account's going to close. I'm going to be really pissed off, but I think it's going to rise. Until it rises, until it breaks even, I'm going to close out my trade. So you're married to that trade. Okay, you think no matter what, it has to rise because of this, and that's exactly what market makers use. Okay, they utilize human psychology. They know exactly what you're thinking whenever you place that trade and you just lost $100,000 or $100 or whatever. They understand that if you're not as mature of a trader as other people are, that you're going to marry your trade and you're just going to hope and hope and hope and wish that your trade's going to go back up and you're just going to close it whenever it gets close to breaking even or breaking even. So never marry your trade, guys. Again, like I said, it's never going to be a straight line. Think about it like an equity curve. If you place a bad trade, if you have a bad day, that's okay. Take your losses, learn from your mistakes, and keep moving forward. Okay, that's really one of the hardest things we need to understand and we need to learn from trading is that it's okay to lose money. And that's also another thing that I wrote down is whenever you put down money to open up a live account, I don't want you guys to pull out your savings and pull out your piggy bank and sell your TV and gather up everything that you have. Okay, I have $1,000. Let me just open up $1,000 through my live account. You should never do that. Okay, you should only trade with money that you're okay with losing. Okay, so think about it like this. I know a couple of you guys are going to open up a live account with $100 or $500, and that's okay. That's what I did my first live account. But whenever you put down $100 to open up your live account, I want you guys to have the mindset of, I'm going to be okay if I lose this money. Okay, you're going to put $100 down, and you're going to tell yourself, if I lose this money, I'm going to be okay. Like, I'm not going to die. I'm not going to, get kicked out of my apartment. I'm not going to cry. I'm not going to whatever like this. I'm losing $100, and I'm going to be okay with that. Okay, it's not a negative way of thinking. It's just going to prepare you for the worst. Because if you gather $1,000 and I have 2 pennies here and a couple nickels here, and you throw that all down, guess what? If there's ever a time in the market where you happen to lose that for whatever reason, where I'm just saying, guys, worst case scenario, it's not going to be a pretty picture for you guys. Okay, so I want you to understand, if you're putting down $100, you're putting down $500, that's money that you're okay with of investing, and that's money that you're okay with losing. Okay, obviously that's not going to happen because we're elite members now. We understand the markets, we understand market makers, we understand the indicators, the signals, the patterns, the secrets to grow our account and master the signals and the fundamentals as fast as possible, but just in case, we're okay with that. Okay? I really want you guys to understand that. Okay, invest money you can afford to lose. Never, ever fear trade. Okay, that's just from confidence. Hopefully you guys have practiced demoing a lot, and you've practiced a bunch of trades, buying and selling trades, different currency pairs, take profits, stop losses, and you're never afraid. You never fear taking a trade. So whenever you open up a trade, whether it's a micro lot, a mini lot, a standard lot, you're never going to be scared. Okay, again, that's from emotions, but that's a very important topic to discuss. Never afraid. You never fear taking a trade. Okay, you need to have the utmost confidence whenever you trade, especially in the live market. Demo, you're having fun. You're watching TV whenever you place that demo trade, right? If it loses money, oh, no big deal. You know, maybe you're a little hurt. Maybe you don't know why. You're confused. If you make money, oh, cool. Screenshot it. You know, send it to the group. That's all fun and games. But whenever you're in the live market, completely different ball game. It's not scary. I'm not trying to scare you guys. It's a lot of fun, especially whenever you guys are making a lot of money, and that's what we're all going to be doing. But I want you to understand, guys, whenever you place a trade, if you don't have 110% confidence, right? I know exactly where this is going. I know exactly when I'm going to close this out. I know if it doesn't go my way, that's okay because I can put it stop loss. I'm going to do this. I'm going to do this. Safety net, safety net, safety net. I'm going to be okay. I'm going to place this trade. If you don't feel like that, if your hands are shaking whenever you place a trade, like I'll admit it, whenever it was my first week of live trading, my hands were shaking just because it was my first week, right? I didn't have this team here to help me along the way. I was kind of by myself. And so if you're not 110% confident, don't place that trade. Okay? Wait until you have that confidence to place that trade or to place those trades. Okay? Hope you guys are liking this. Is this good? Good information for you guys?
Yeah.
Cool. Cool,
Loving
cool.
it.
Like I said, guys, trade based on knowledge, right? So that's the whole importance, the whole purpose of this elite team, to give you guys this knowledge. Yes, it's cool to give you guys a fish, but if I can teach you how to fish, that's the whole idea. You guys can go out on your own, know exactly what I was doing, and more. I want you guys to be better at this than me, okay? And hopefully you guys can pay it forward and show the world what we have in store for us. Okay, so just trade with knowledge and get rid of your losses after 10%. Okay, if you need to calculate that, before you trade, that's kind of what I do. 10% is this. Okay, I place my trade and I check it. If it goes past 10%, you know what? Hey, no big deal. Stop loss is there, or I just manually shut it off. Next day, next trade. Okay. Be consistent, guys. Analyze the market in a fundamental but also a technical way. Okay. Yes, we have different indicators. We have different signals and patterns to help us along the way of understanding what the market is doing. The trend is your friend. But we also have the news. We also have GDP, gross domestic product. We also have a bunch of different indicators in the technical way, also the fundamental way, to help us understand what the market is doing. Okay, so we need to be well prepared in as many things as possible. I'll admit, guys, there's a lot of indicators and signals and patterns that I'm not fully aware of. I don't consistently use them in my day-to-day basis, like levels. I think, Stephen, I was talking to you on the phone, right, whenever we were talking about that, where I admit, my level skills of analyzing the market and visualizing, okay, well, what level is the Euro USD on right now? Oh, it's on level 2 rise. Okay, gold is on level 3 drop. Whatever it may be, I'm not too well prepared in that subject. So whenever someone asks me, hey, what level is it on? I'm having a hard time with that. But if someone says, hey, what trend is this? Where's horizontal support resistance on this? Where's the MWs? Right? Where's the stop hunt low rise? Where's stop hunt high drop? All the different stuff where I personally use on my day-to-day trading, and I feel like I've not perfected it, but pretty dang close to that. I'm spot on with that stuff. But we need to be very well prepared in all the different indicators because they're all extremely helpful. Again, you're going to find the ones that you like the most, your favorites, the ones that really help you out the most. And that's what I'm telling you guys to perfect those. Okay, emphasize that in your trading style the most, and just perfect as much. Next page. Okay, 3 types of traders. That's pretty basic. Scalping / day traders. There's swing traders and there's position traders. For me, and I think everyone in the group, we're scalpers. And what that means is we enter the market, we exit the market in minutes and hours. Swing traders, they hold their trades from 1 to 3 days, 1 to 5 days, just a couple days. They enter the market on a Monday. They use technical analysis. They look at day charts and 4-hour charts, and they see, okay, in a couple of days, where's this going to go? Is this going to drop overall? Is this going to rise overall? Sometimes with swing traders, they don't really care if there's a huge rise if they place a sell because they know at the end of the day it's going to drop. Okay, so that's what swing traders are. Position traders, they hold their position in for months, for years, and personally, that didn't really surprise me. That didn't really sound appealing to me just because it sounds a little boring. You place a trade, okay, I'll see you in 6 months on my birthday or something like that, right? Like you want to actually see what your trade is doing. At least for me, I want to see what my trade is doing. I want to see how much profit I can make in 30 minutes. I want to see how much money I can make in an hour, how many pips I can catch in 15 seconds, right? So I really utilize scalping, and because we're scalp traders, we utilize the 15-minute, we utilize the 1 hour, we utilize the 4 hour. We utilize different indicators that scalpers use than swing traders and even position traders use. Completely different. And you can't be 2 traders at once. You can't be a scalper and you can't be a position trader. That's just not going to work because they're just 2 completely different traders. Okay, so if you like a swing trader mentality, if you like the idea of holding it for a couple of days, utilize the indicators and utilize the technical or the fundamental analysis in order to be a successful swing trader. And the same for the other types of traders as well. But I think that's pretty much it, guys. Like I said, U.S. residents were limited to 50-to-1 leverage, right, as a online forex trader. But there's ways around that. What we can do is we can actually pay $50 for a virtual residency, either in Europe or Africa or Asia or whatever like that. And so as long as we have a virtual residency in a country outside of the US, it's okay to have an international broker, to have a higher leverage. Okay? So depending on what forex or what broker you have, there's going to be different ways to go around that little loophole of United States only being 50 to 1, which kind of sucks, but there's ways around that. Okay? If you have any questions about that, just shoot it through the group. No big deal. But and also, I wrote this down. You can start with $100. I've talked to several people. What's the lowest you can start with? $100. Don't really recommend that, just because we're going to take a look here at the step-by-step six-figure plan, and you're going to see how your money really multiplies with just 50 pips a day target, and starting with $100, and the difference between that and starting with $500. And it's a pretty big difference. Okay, so if you guys can, I would wait and open up a live account with $500. The best, really minimum amount, I would say, is $1,000. Again, guys, I don't want you to sell all of your stuff and trade all your Pokemon cards and sell your collectible baseball cap, whatever it is. Use whatever you have. Okay, I'm just saying it's going to be a lot easier for you to start out with the most amount of money in your account. If you start out with $100,000, my God, you are going to be killing it in your first week or in your first month. Okay, because it's so different than if you were to start with $100 or $500. Okay, talking about the lot sizes, talking about how your money really multiplies the higher lot size you use. Okay, if you pull out a trade, which you entered 2 hours ago for the Euro US dollar, and you placed one standard lot, which is a pretty big amount. You need at least $500 in your account to place one standard lot. Let's just say we place a one standard lot buy for the Euro US dollar, we take it out in 2 hours, and we make $500. Okay? 2 hours, let's say $1,000. We pull it out for $1,000. That'll make it easier for me for the math. So one standard lot, 1.0, we pull out with $1,000. Let's just say we have the money in our account for the same exact trade. We place 10 standard lots. Okay, that's a lot of money. That's one standard lot is $100,000 of buying power. Okay, for that Euro US dollar. So now you're placing $1 million of buying power for the Euro US dollar market. Okay, so that's a lot. But if we had that money in our account, depending on leverage too, leverage will bring that money down. If we place 10 standard lots on that same trade, Euro US dollar, 2 hours, same market, pull it out, instead of pulling out and making a profit of $1,000, we pull out $10,000 in 2 hours. Okay, to see how that multiplies. So it really depends on your lot size, it depends on your leverage, and mainly the amount of money you have in your account. Okay, what's your risk management level? 10%, 6%, 5%, 1%. Okay, let's go ahead and open up our step-by-step six-figure plan. I'm actually going to share my screen for you guys because I have it open right now, and we can talk about that. Okay. Okay, cool. Let me share my screen with you guys real quick. Okay, can you guys see my screen?
Mm-hmm.
Yeah.
Awesome, awesome, awesome. Well, first off, guys, what do y'all think about this? Tell me your thoughts.
It's good.
First time seeing it.
I think it's really safe, that we shouldn't be betting too much money or risking too much money in the beginning. And it's a good way to build up, like you said, slowly.
Definitely, man. The reason why I kind of set this up like this, first week, only risking a micro lot, third week, moving up to a mini lot, and so on and so forth like that, just an increment of 0.05, is because of risk management. Okay,
Mm-hmm.
and I actually calculated. I didn't put it on this actual Excel sheet. I was thinking about it. I already took like an hour to make this because I messed up like 10 times whenever I was making it. But I can probably edit it and I'll post it in the group again, covering the actual risk management percentages. But if we look here on these couple of columns right here, if we open up a live account with $100, we're going to see here that in the first week. Okay, sorry. Let me backtrack a little bit. This is our target, boys. 50 pips a day, 5 pips a week, because it's a 24/5 market, 250 pips a week. Okay, so what does that mean? That means that come Sunday, we have 2 goals in mind. We have 2 targets. I don't like goals. We have 2 targets in mind. We have 50 pips a day, and we have 250 pips this entire week. Okay? So, the way how I see it is that when's the earliest I can catch 250 pips? That's it. If I can catch it on Sunday, okay, I'm going to move on from there. Okay? But those two targets in mind is really going to help you guys trade and really see what do you need, what more do you need. Okay? So, whenever, I guess I could just go on to the next part. So whenever we open up our account with $100, okay, so this is going to be our live account, and for our first week from Sunday to Friday, we're going to place micro lots, and that's it. Okay, $5 a day if we catch 50 pips, which is the minimum. So for that entire week, we're going to pull out $25 in profit. Okay, and again, guys, this isn't going to be a straight line. I'm talking about an equity curve. So we're going to make some money. We're going to lose some money. We're going to make some really good trades. We're going to lose some trades. That's okay, as long as we come out with a $5 profit per day and a $25 profit a week. Okay, so our account balance on Friday at the end of the week is going to be 125. Okay, so just really easy addition. The actual risk management for those trades, having $100 in your account and risking 0.01, which is a micro lot, you're risking 5%. Okay, I don't know if you guys want to write that down or not, but we're risking 5% every time we enter a micro lot with only $100. Okay? Compared to if you were to open your live account with $500, the same thing, risking a micro lot, making $5 a day, $25 a week, your account balance $525, you're only risking 1%. Okay, that's a pretty big difference. Like I said, guys, it's a huge difference from $100 to $500, $100 to $1,000. A huge difference. Okay, second week is actually going to be pretty staggering. So we actually jump up to 5 micro lots, so 0.05. We're making $25 a day, pretty good. $125 a week, right? That's a really small part-time job. The end balance on Friday is going to be $250. But our risk management, guys, we're risking 0.05 lots with only $125 in our account. Okay, and that risk management percentage level is 20%. Okay, 20%. That's quite a lot. So again, guys, whenever you're thinking about it in the long run, you're going to make some money, you're going to lose some money. Okay, it doesn't matter how good you are, it doesn't matter how great this team is, it doesn't matter how good the called out trades are in the group. It depends on a lot of stuff, right? When you enter the trade, when you exit the trade, where your take profit is, where your stop loss is, a bunch of different stuff. And whenever you're risking 20% of your whole entire account in one trade with a 0.5 lot, that's a lot. Okay, $500, actually, sorry, $525 in your account. For the second week, you're trading 0.05 for the entire week. You're risking 4.8%, so less than 5%. Okay, so 20%, less than 5%. Okay, and I can go on and on about this. For the first week is 5%, second week is 20%, third week is 20%, fourth week is 15%, then 11, then 9, then 7.5, then 6.4, then 5.5, 5, 4, and so on and so on. It goes down, 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 because obviously we're making a pretty substantial amount of money in the last couple of weeks in our game plan, right? But the main ones I was concerned about here is 5%, 20% for the second week, 20% for the third, 15 for the fourth, and 11 for the fifth. Okay, 20, 20, 15, 11. Okay, for the $500 account, it is 1%, 4.8%, 7.7, 8.3, 7.8, 7, 6, 5, 5, 4, 4. Okay, the highest, again, was at the same week, okay, but instead of 20, it was 7. Instead of the second 20, it was 8, and then went back down to 7. So this account never reached 10% risk management, okay? So think about that, guys. Whenever you're placing these trades, again, you know, one mini lot really is not that much, okay? And again, guys, this is just the minimum. We're catching 50 pips a day. I don't know if you guys understand the amount of pips in order it takes to grab in a trade or in a day, but 50 pips a day is easily attainable. Okay, on average, I catch anywhere from 75 to 100 on average. Okay, but that's me. I have a little bit of experience, so on and so forth. But whenever you're thinking about 50 pips a day, it's really not that much. It is attainable for beginners. It is attainable. Okay, that's why I wanted to make this step-by-step plan, so anybody can have these targets in mind: 50 pips a day, 5 days a week, 250 pips a week, and easily attain that. Okay, I didn't want to say, guys, let's grab 100 pips a day, and for beginners, the same thing, 100 pips a day. And guess what? If you don't grab 100 pips a day, if you don't grab, what would that be? 500 pips a week, you're going to get discouraged. Oh man, I can't move past this week. I can't grab 100 pips a day. I can't raise my lot size. I can't do this. Whatever. Okay, 50 pips a day, easily attainable. That's the minimum. Okay, but whenever we look at these amounts, it's really not that much. I wanted to give you guys just an idea of how much you're actually risking with these lot sizes here. Okay, so compared to the $100, compared to the $500. Obviously, $1,000, if we were to compare that to $1,000, that would be, again, a pretty drastic change, especially even from the $500, but especially from the $100. Okay, so the more that you open up your live account with, the better off you'll be concerning risk management. Okay, that's huge. That's huge, guys. Again, you can be as confident as possible. You can be the best trader in the world, but risk management is there for a reason. Okay, I don't want you guys. I know you guys have that mentality. I want you guys to have the mentality of saying, whatever I'm risking, I'm okay to lose it, right? But at the end of the day, my job is to make you guys the money, not to lose money. Okay. So, but besides that, guys, I really wanted to talk about a couple other things about this. How easily, again, 50 pips a day is to grab. How easily 250 pips a week is to grab. Sometimes we grab that in a day, let alone a week. So that gives us two options. Do we either stop whenever we hit that target? Once we hit 50 pips a day, okay, I'm done, going to sleep, or okay, let me enjoy the rest of my day. Same thing with 250 pips a week. Okay, it's Wednesday, it's Thursday, I already grabbed 250 pips for this entire week. Do I stop trading? Do I, go enjoy the rest of my week? Or instead of stopping right at that target, do you go for more? Okay, the whole importance of this target goal set is that we're trying to eliminate greed. Greed kills all good traders, and we want to eliminate greed from our trading life. Okay, and how do we do that? By holding these set limits. Okay, 50 pips a day, 250 pips a week. But if you guys already grab 50 pips a day, which I already grabbed 30 pips in the first 30 minutes of the market open today, if we already grab 50 pips in a day, if we already grab 250 pips for that week, we can go for more, and this is how we do that, without risking anything, okay? So instead of grabbing 250 pips a week and saying, you know what, I'm going to place one more trade, and let me see how it goes, guess what? It goes wrong for whatever reason, worst case scenario, and it wipes out your entire 250 pips for that week, and you need to start over. Instead of doing that, we're going to use stop losses. We're going to use safety nets in order to say, hey, if a trade does go wrong, if it doesn't go in our favor, even if we lose that trade, we are still going to come out with 250 pips for that week. Okay? So if you guys want to, again, this is the minimum. Okay, for the 10th week, we're going to have $6 grand in our account. In the 20th week, we're going to have close to 25 grand in our account. Okay, we're going to be making 2,500 a week just with 250 pips for that week on our 21st week. Okay, this is the minimum. If you're wanting to increase your, not your lot size, but if you're wanting to increase your pips in your day or in your week, if you do place more trades, I want you to understand that it's going to be not to risk, but to gain pips. That's it. We're not going to risk anything. Okay? We're going to set our stop losses to break even, and we're just going to go forward. Okay, for profit. That's it. We're not going to risk anything. Okay? So if we place a trade, okay, let's just say, for example, we have 250 pips. Okay, we close out all our trades, we have 250 pips, and it's a Wednesday. It was a really good week, and we have 250 pips, and it's a Wednesday. If you want to go for more, you place a trade. Okay, Euro US dollar, 0.01. Okay, this is our first week, 0.01 lot size, and we're starting to make money. Okay, we're in the profit zone. What do? We move our stop loss up. Okay, if for whatever reason the market goes back down and it hits your stop loss, that's okay. We did not lose money. We did not lose pips. Everyone's a happy camper. That was just a free trade for us. Does that kind of make sense for you guys?
Mm-hmm.
We're not risking anything. That's just a free trade. Okay, if you set your stop losses up right, And again, we have safety nets. If it doesn't go in our favor, that's okay. It was a free trade. It was fun while it lasted, and we still have 250 pips. But if it continues to rise, if we place a buy, or an example where we place a sell, it continues to drop, we move up our stop loss closer to where the market price is. Okay? So if it ever hits that stop loss, guess what? We'll get 5 pips out of it. Okay? Let's just say the market continues to increase. It continues to move in our favor. We move our stop losses closer and closer and closer, so that whenever it breaks our stop loss, whenever it hits our stop loss, we pull out 10 pips, we pull out 15 pips, and that was a free trade. We're not risking anything. Okay, that's how we're able to take our 50 pip target and blow it out of the water with 100 pips a day, with 200 pips a day. That's my goal for you guys, is to grab a lot more than 50 pips a day, to grab a heck of a lot more than 250 pips a day, or sorry, 250 pips a week. 250 pips a day is going to be, well, our real goal, but I don't want to give you guys that huge head because emotions in play. So 50 pips a day, 250 pips a week, that's our minimum target. Okay, for 5 months, almost 5 months, a little bit more than 5 months, we'll be pulling 2,500 a week. Okay, that's not, you know, millions of billions of dollars, but that's a pretty good start. Okay, that's doing the minimum. For me, I don't know about you guys, but I never do the minimum. I don't do good doing the minimum. I'm always here to be the best of the best at whatever I do. Okay, so if you guys lock arms with me and my top traders, we'll go places. Okay, I'll show you guys how to grab 100 pips a day and 200 pips a day. Okay, but I want you guys to understand the limitations. I want you guys to understand the risk management. Okay, so with that being said, guys, let's. I'm gonna continue to share my screen because I opened up my demo account. And I want to show you guys, because I mark up my demo count for these calls. I want you guys to help me break down the markets, okay? Because we all understand. Oh, actually, Euro just broke. That's cool. I missed it. But I want you guys to help me break down the markets, because what I like to do every single day, like you guys know, and every single morning, I like to break down the markets to show you guys what exactly happened, what the market makers were doing, what was in their head. What did they actually utilize? What indicators, what signals, what patterns did they use in order to move the market, every single market? Okay, and this is what we call homework. So whenever you guys do your homework, I'm telling you guys, hey guys, do your homework. Or you know, on the weekends, I always like to do homework just because I like to get ahead. I like to see what they were actually doing, what the market makers were utilizing in the markets, not a year ago, not a couple months ago, but a couple days ago. Very recent, very up to date, to give us a better picture of what we can expect in the upcoming days, in upcoming weeks in the market. Okay, how does that sound? So let's first look at the Euro US dollar, guys. I don't know if you guys just want to look off my screen or if you guys want to pull it up on your screen as well and you could just hear me talk, and I really want this to be like a interactive discussion, just because if I just say, hey, this did this did this, do this and do this, you're not fully, I mean, you're going to understand it, you're going to learn it, but it's just, you're going to learn it much faster if you say, hey, did it do this? Hey, was this an M? Or hey, you know, I don't really know what's going on. Okay, so for the Euro US dollar, guys, just to give you a practice, like example of what we can do here, I set up a couple of not stop losses, gee whiz, Marc Andre, horizontal support and resistance lines. And what I like to do is I like to look at the 15-minute, the 1-hour chart, and the 4-hour chart, just to give me a better picture of what's exactly going on. Okay, the 4-hour chart, obviously, every candle's 4 hours in the market. 1-hour chart, one candle represents 1 hour in the market, and 15 minutes. Okay, so 4 hours, we do see lately that it's been increasing. Okay, and it's been increasing for a while. Okay, we can see here that it's been increasing. What says the 19th, so around the 18th or, yeah, the 18th or 19th floor. So for the past couple of days, the Euro US dollar has been increasing, and it hasn't hit this high since, let's see here, since around June 20th, June 21st. So that is, that's been a couple months, okay? So what we know from that analysis, oh, let me zoom in. What we know from that analysis is that, number one, okay, it hasn't hit that high in forever. It's either going to continue to rise, okay, or it's going to just plummet, and it's going to plummet hard. There's a couple of indicators that we can use to get a better picture of what we can expect. Okay, and a couple I like to use horizontal support and resistance lines here, trend lines here. So we can look at the 1 hour chart and we can see I did create some trend lines here that are following the rise in the euro US dollar. Okay, and we can see every single time that it rose, it came back, it retested, or you can say it retraced, but it retested the trend line and it bounced back up. Came back down, retested, it didn't break, so guess what? It jumped back up. It came back and it retested, it did not break, and it jumped back up. Okay, that's what we call, I don't know what we call it. That's what we call good trades. I mean, I don't know. We can understand from this movement here. Once it actually touches, it doesn't have to touch physically because we can see here that it never touched. It just came close, it retested, and it jumped away. We understand that it doesn't break. If it doesn't break, that means that we can hold our buy. We can keep our long play in check. Okay. I placed a horizontal resistance line at the top here and actually broke this horizontal resistance line here, and we can see that come the 19th of June, 16th of June, around the 16th, 17th, 18th, 19th of June, that was whenever it was this last high, the previous high. And we can see here that I did enter this this resistance line here, and it actually broke that, okay, for the 4 hour candle. So what I would do is I would wait until this 4 hour candle paints. Okay, you're going to see here that these wicks are going to go crazy. Sometimes it's going to pull back all the way and even turn into a red candle. Sometimes it's going to pull up even further and retrace back, and it's going to form a higher wick. But whatever it does, we won't care until it paints in the chart. We don't care. We don't care if it goes 10 million freaking zillion pips up and it retraces back down under the line. That doesn't matter. We want to see where it actually paints. That's one confirmation to know where the chart's moving. Okay? So that's a 4 hour chart. 1 hour chart, we see that it did paint over the line. So that's a pretty good confirmation to know that it might continue to rise. And guys, just for FYI, I do think that the US dollar will rise tonight. At least for now. At least for now, I do think it's going to continue to rise. So we see that it has broken. Okay, and it's following this trend line, and it's following this trend line. As long as it's above this trend line here, as well as this trend line here, we're Gucci. We're good. Okay, so 15-minute candle, 15-minute chart, we do see it is following these trend lines. It did break this resistance line, so we expect that it's going to continue to rise. Okay, easy enough. We do this every single morning, every single night. So GBP USD, Great Britain pound. I did place this resistance line here where it was touching, and you guys can see here that whenever you see these long wicks all painted towards the same direction, we can expect a reversal. And guess what? Boom, it drops. Okay, so just like that's not like the best example in the world. I'll show you a better example. Yeah, you can consider this as a long wick formation where you see long wicks pointed or tailed towards one direction, we see a drop. Okay, so it's not really an indicator. It's just a helpful tool to see and visualize. Okay, well, whenever it's near the high of the day or whenever it's near the low of the day, if we do see some long wicks painted towards one direction, okay, we can expect a reversal. That's just one of many indicators that we use. Okay. I also created this trend line here. Let me just outstretch it a little bit. Does everyone know how to actually create these trend lines in horizontal support and resistance on their charts?
I haven't tried.
Wait, what'd you say?
I haven't tried that.
You haven't tried that yet? Okay, well, whenever we go look at the other charts, I can show you guys how to actually create these.
Yeah, I can bring it back up when I get there.
Okay, cool. Let's see here on the 1 hour chart, we see, oh, this is why I love this so much, guys. This is why I freaking love this so much. Okay, so for the 1 hour chart, we place this at the low of the low. Okay, this was back in August, early August, so 7th, 8th of August. We place it at the lowest end of the candle, not the wick, but the candle, and we connect it to where it is right now. And we see that it's following this trend line perfectly. So if you guys happened to be a swing trader or even a very short position trader, you guys could have seen, okay, well, it's following this trend line pretty nicely. It came back, retested, but it didn't break, not even close. It shot back up. Okay, continue to rise, continue to rise, continue to rise. Guess what? It came back down and retested, did not break. It was very close. That's where we would know. We would place a buy here. We would go long, and the GBP USD, we would pull out easily. What is that? And we're in the 1 hour chart. I would consider that 150 pip move. Okay. Go back down, continued at the same price level, came back down, retested, did not break, rose again. Okay. That's why I love trend lines and support and resistance so much, is because they're extremely helpful for us to understand, okay, what's going on? Okay, what can we picture here? All that different good stuff. Also in the 4 hour chart, we see another trend line here. Because again, the end of the candle, not the wick, but the end of the candle, we connect it from here, again to where we tested here, again to where we tested here, and did not break, and to where the price is currently at. Okay, so we can either, for this play, for tonight, I would tell you guys to wait until it came back and retested. Because right now, let me just zoom in a little bit so you'll get a better picture of it. Right now, it's pretty high off the trend line. Okay, so I wouldn't necessarily place a buy. I wouldn't necessarily place a sell. I wouldn't enter a trade in the GBP USD until it either came close to this horizontal resistance or these trend lines. Okay, that's going to be practice for you to understand how to enter trades better. Okay, so you don't want to enter a trade whenever it's in the middle of everything, doing absolutely nothing. You want to see where it's coming in contact with the indicators or using the signals and the patterns that we know how to use. Wait a minute, take it easy with. Okay, so whenever it gets close, or I even retest the trend lines, we'll know if it breaks, we'll place a sell. We'll place a sell and we'll close our eyes because it's been rising for the past week or so, or actually a couple weeks. But if it doesn't break, if it holds, we'll know to place a buy right here. We'll go long right here. Okay, and we'll go all the way up until it hits this horizontal support resistance. And again, same thing. If it touches and if it penetrates, we'll continue to hold our buy. What I would do is I would move my stop loss further up, closer to where the market is. Because let's just say, guys, if it penetrates here and for some reason it just drops down below, if we would have placed a buy right here, which we would have lost a heck of a lot of money. We would have closed out our trade in the negatives and we would have gone home crying. But if we would have entered a buy right here and it broke this resistance line and it continued to rise, I would move my stop loss up, closer, closer, closer to where the market is. Because if it ever drops back down and we don't, again, we're not predicting where the market is and it goes against our favor, it would close out of our trade, and guess what? We would still catch pips. Okay? And I don't want you guys to say, oh, I didn't grab 25 pips this trade, I'm bummed out. Guys, honestly, in the live market, if you grab 5 pips, if you grab 10 or 15 pips, you're a happy camper. Okay? Because you have this stuff right here, you have all this different stuff 24 hours a day, 5 days out of the week. Okay? Depending on what you guys are doing in your life, depending on how you prioritize this in your life, you can do some damage. Okay? That's why I love this so much. We have the ability to make as much as we want. Okay? I'm going to call out this trade later tonight, guys, in the group chat, but again, I would say wait until it touches this trend line. If it breaks, you go long. Or sorry, if it breaks, you go short. If it breaks, you go short. If it retests and it holds, you go long. You place a buy and you close your eyes. Okay? That's GBP USD. USD JAPY. USD JAPY has been dropping for the past couple of days. This is a 15-minute chart. Place my trend line here and as well a shorter, weaker trend line here, but it's following both pretty nicely. I did place this horizontal support right here. It broke and it dropped. Let me just move to the 1 hour chart here really quick. You can see, again, my trend lines hold very nicely here. Horizontal support, horizontal resistance here. This was a pretty long consolidation phase. I mean, yes, we could have scalped, we could have made money in the drops and the short rises, but this was a pretty dang long consolidation. I'm surprised. But, okay, so let's see, look here. It came back and retested after days and days and days in consolidation. It came back and retested, it held. We could have placed a buy here if we wanted to. Sure, not the largest rise in the world, but we could have. Okay, it came back down, retested, guess what? It broke, we close our eyes. We place a sell, we close our eyes. This is how it works. This is how easy this puzzle is. Okay. Let me check the 4-hour market really quick. The Jappy has been dropping like crazy, guys. I would expect it to see right here. I entered this horizontal support where it actually hit the low of the month here in the 9th of July, so about a month and a half ago. Guess what? We're going to see if it penetrates this, we continue to place our sell, or we continue to hold our sell. But if it holds, guess what? We know that it's going to retrace. It's going to reverse, and we would place a buy right here. Okay? As easy as that. It's that simple. It's like freaking, it's easier than algebra, guys. It's easier than second grade literacy. Like, it's just looking, oh, okay, sorry, I was getting off topic. You see this gap right here? This is what I was telling you guys at the very, very beginning of this webinar, where once the market opens on Sundays, we like to call them gaps. And you can see another gap right here, where this was a bullish candle. These were bullish candles, and it ended Friday in a bullish movement. But guess what? News came out, technicals came out, and guess what? It ended up starting out right here. Okay? So we could have placed a buy in our first candle whenever the market first opened up, and we would have caught a very, very decent amount of pips on just this one 4-hour candle. Okay? And you guys can see these are 4-hour candles, so guess what? The market did not close the gap in the first 15 minutes or in the first hour, 4 hours. But eventually, guess what? In the next couple of hours, or sorry, the next couple of days, they close out the gap. So we know every gap closes, we make money from that. Okay, same thing right here. Boom, open the market down here, it closed out in a couple of hours. Same thing. Okay. Any questions about Jappy?
No.
I just had a question about what you meant by when you said paint.
Okay, good question, man. So whenever a candle paints, let's move to the 15-minute because I'll show you a pretty good example of that.
Okay.
So let me zoom in a little bit. So this is where the USD Jappy market is right now, 121, 147, right? And every single candle represents 15 minutes of the market. Okay, so this means that in 3 minutes, this candle is going to close. So whenever a candle closes, it makes its mark in the market, and it's irreversible. Okay, and this is what I mean by the candle, the actual colored box. Okay, the ends are what we call wicks, right? And we don't really care about the wicks unless we're using fibs, but that's another story. But candles are what we call these boxes, and whenever the candle is finished, whether it's a 15-minute candle or a 1-hour candle or a 4-hour candle in this circumstance, 15 minutes. So after every 15 minutes, this candle paints on the market. So essentially it just closes in the market, and it represents that price.
So it's a way of saying it closes.
Yeah. Once a candle paints in the market, it means the candle has been closed, and the price is irreversible. Okay, so like I was telling you guys, for this example right here, this candle paints touching this trend line. So this next candle, it rose a little bit above this trend line here. Okay, it actually broke. But we understand in order to see an actual reversal, we're going to wait until this candle paints. And guess what? This candle paints, or this candle closed below the trend line. Okay? Yeah. Same thing with this one. This candle wick was a pretty long candle wick because it actually rose to this level. It broke again trend line. But guess what? It never broke. It painted below. And because we see this pattern here of the wicks breaking continuously again and again above the trend line and it didn't break, we can expect a pretty nice reverse. And that's exactly what it did. Okay?
Okay.
So, good question, though. Good question, man. Let's look at CHF. Look at the Swiss franc. And look at the 15-minute. How do you guys like these breakdown charts?
Great.
Yeah.
Okay. Cool. I don't want to bore you guys. But okay, so for the past couple of days, Swiss franc has been dropping. I did place this trend line earlier today, and it has followed this trend line pretty dang nicely. Again, retest, held, dropped, retest, held, drop, retest, held, drop. Again, guys, I would find a support and resistance line somewhere around this level, whether it's above or below, and I would connect that trend line along with this diagonal trend line, and I would say, wait until it gets close. Okay, right here, for example, wait until this gets close. If it holds, place your sell. If it breaks, go long. Okay, the same thing right here. You wouldn't want to place a sell right here, guys, and I'll tell you why. Because right here, it can do anything. It can drop, and it can drop forever. Or it can come back, and it can retest. And it can break. Okay, so it can really do anything. If you place a sell right here, it'll do the exact opposite, and it'll rise. If you place a buy right here, because you think it's going to retest, guess what? It's going to continue to drop. Okay, so wait until you have confirmation. I would say wait until you have several confirmations, several indicators that you know that you're good at to give you as many confirmations as possible. Okay, the more confirmations that you have before you enter a trade, the more confident that you're going to be, and the least afraid you're going to feel whenever you enter a trade. Okay? So let's look at the 1 hour really quick. 1 hour, okay, you can see here a couple of support and resistance lines here, came back, retested, dropped. Pretty long consolidation phase, elongated consolidation phase, but every single time, guys, every single time it came back up, retested, it dropped, and it dropped, and it dropped, and it dropped. Okay, so pretty good stuff. 4 hours going to be practically the same, elongated consolidation phase, drop. So, yeah, pretty simple stuff, guys. Pretty simple stuff. Let's just cover Australian dollar, US dollar. The reason why this is blank and the next couple of charts are blank is because I wanted you guys to help me out. Okay, so we're going to look at the 15-minute chart first. Again, you guys can look at my screen. You guys can look at your own screen. You guys can look at your phones, whatever you want. But I want this to be an interactive discussion of what we think the market is doing, or what trends, what signals, what patterns do you guys see in the market?
It looks like consolidation.
Let's see here. You think it's a consolidation right now, like this little bit right here?
Well, no, not that. I was talking about, like, if you zoom out.
Oh, okay.
Yeah.
Oh, yeah, like in general, pretty much. Like if I were to click on, 1 hour, you could consider this consolidation. I like consolidation to be a little bit nicer, a little bit neater. I would call this more like tidal waves, really just confusion in the market. But yeah, definitely. Like it's not definitely going one way, going down, going back up, going down, going back up, just confusion. But what is this? Odd? Yeah. Oh, and also, guys, you can see here, market opened up. I didn't place this gap trade here, but you could have. Market closed on Friday here, and it actually opened up way down here. Okay? And so, like you guys remember in previous currency pairs, that it didn't necessarily cover the entire gap in one candle. Okay? Sometimes it took one candle, sometimes it took 10 or 24-hour candles. But we understand, I mean, you could have caught some really nice pips here. You could have. But we're going to understand that in the next upcoming maybe hours or days, it's going to close out this gap completely. Okay? So that's one indicator. But what else do you guys see in AUD USD right now?
I mean, do you zoom out?
Yeah, zoom out, sure.
Because I was gonna put a line there too and say you can see that it dropped under, so then maybe you can call that a support resistance. I was also gonna add one at the top. Those two peaks like go up.
Sure.
Yeah, I was gonna add a line right there.
Let's do that then.
It never really breaks that either, so.
Yeah, we see some pretty long wicks trying to penetrate, doesn't drop. Long wicks try to penetrate, drop. So that's a pretty good resistance level right there. We can see right now, currently, Friday and today, Sunday, that's been dropping. It is a pretty bearish momentum right now, so I would just play around with this here.
You could even draw a small trend line right to the left of you, like that it drops right there, and you can get in right there. So like probably 4 or 5 inches away from where your mouse is right now, that little drop, that pin to the bottom, like that lonely pin to the bottom, up, up,
Oh, right here. You talking about this?
pin to the bottom. So left, left, down, all the way to the bottom, right there. I'd draw a small trend line. I know that they're not as strong as if you were to draw it from like the hour or 4 hour trend line, but you would still be able to see that, hey, this thing dropped under.
Or maybe something like this. That's actually a really good trend line. Because look at that. Came down, penetrated, didn't break, rose for a couple, no, sorry, just for 1 day. This is 50 minutes. But it came down, completely broke, and it never fully penetrated. This is Sunday. So this is actually a really good trend line that we could have placed right as soon as the market opened. And we were to see, okay, well, guess what? If it doesn't penetrate, we're going to place a sell. And we could have banked some pretty nice pips down here. So that's a good eye right there. That's a good eye. Again, guys, I would call odd as a bearish momentum. Let's look at the 1 hour really quick.
And honestly, that trend line that you drew would have still been good if you drew it elongated to the left as well.
Oh, yeah. If we pull it out, let's just look at that real quick. Let's see how well it holds.
Yeah. There's more to the bottom, to the left as well. If you zoom out, I think there's more. And maybe not. All right. Maybe I was.
Hey, but still though, I mean, this just gives us another confirmation. The more confirmations, the better, guys. You know, it came down, it held at this resistance line, but we also have this one as well. It's a hold as well. And if it didn't break, we know to place a buy. Good stuff. Good stuff. 1 hour, Zevin, you kind of saw this. You know, some weird, funky consolidation. Nothing really happened. We could have entered a trend line maybe like here. If we really wanted to, we'd say, okay, this is a pretty nice bullish movement here for the first couple of hours on the 20th, and then it broke, dropped, hit this trend line here. But I don't really see anything spectacular, anything that really catches my attention. This here, there's some pretty nice pins, by the way, guys. If you don't see that, pins down to the bottom, shoots back up. Let's look at the 4 hour really quick. Okay, it's dropped the past month of June, past month of July. Again, doesn't really do much. So I don't expect a lot of movement, guys, in odd for the next couple of days. It might do the same thing as this. It might just create some more tidal waves, but and this might actually just be like one leg of a tidal wave. So it might reverse and come back. But then again, tonight, guys, we have trend lines, we have indicators, we have signals and patterns to help us understand what's gonna happen. We're not gonna predict the future, but we're just gonna have tools in our toolbox or an instruction manual for this puzzle to understand, okay, what can we expect to get us better prepared for the next move. Okay, so let's look at NZD. NZD was one of the markets that actually caught 10 pips off of the gap really quick. Yeah, guys, you can see here, 15-minute candle. Market closed on Friday over here. Opened up way down here, about 10 or 12 pips down, and we could have closed out right here. About our 10 to 12 pips, pretty dang easy. So after that, though, you guys can see we can actually place. I don't know how strong this would be. Yeah, it holds pretty true. We can see here that it almost penetrated, but it didn't. It held and it dropped. Okay, so now it's doing some funky consolidation right here. Nothing too crazy. I think it's actually going to build up until tonight. I think we're going to see some movement in NZD tonight in the London session. But do you guys see anything else besides this?
Not really. I mean, I'm trying to look at gold right now. If that makes. I mean, tell me your thoughts on gold. Look at gold and tell me what you think. Because I drew a trend line from the 19th of August up on the 15-minute chart, and it looks like when it broke my second trend line, and it looks like it's using that second trend line as a support and resistance down now. So it's just going to come up and then just keep on dropping, and that's what it's done every single time. It's picked to it 3 times and just dropped from there. I want to say a decent amount of pips. Let me freaking count right now. We're talking 90 pips from the first pin up. We're talking 40 or 50 pips from the second pin up, and we are talking 97 pips from the third pin. Yeah, you have. Well, yeah. Well, no, it's this. It's your first trend line.
My first trend line.
Yeah, your first trend line is what I used as what it keeps on pinning to, basically.
Yeah. Whenever I was placing this trend line, I saw that it broke a couple of times at these peaks, and I would just say that it held up to around this point. Because if we were to pull it out and stretch it out until these peaks, they're just cutting it too close, man. Let me see.
Well, what I do with trend lines, well, what I try and do is I draw it at the wick first, and then I go to the actual closings or openings of them. So if you drew it at the wick instead of the close of the first where you first started it, it would actually hold completely.
Are we talking about like here?
Yeah. So the red wick.
Oh, the red. Okay. Yeah, it's just for me. Some traders, they do connect the wicks whenever they create their trend lines. I've just been taught to enter trend lines and draw trend lines at the end of the candlesticks. And it's just, I guess it's just personal preference, because I've heard of quite a few people that actually connect wicks. It's just, for me, it's worked out very nicely to connect them at the candlesticks. You could argue that this is still valid up here, because whenever I zoomed in, you did see, okay, whenever it broke, it did rise. Whenever it broke, it did drop here. It broke and it rose a little bit, but these are, very small increments in candles. It broke, rose a little bit. So you could argue that it was still valid here. Even though they weren't the greatest rises and the greatest drops, but that was a good eye. If we look at the 1 hour though, yeah, gold is just going up, man. Gold is just going up, and I don't see it dropping anytime soon. I mean, before I actually put my word on that, let me just draw something real quick. I see a nice trend line right. Where'd it go? Right there. That right there is a beauty. That right there is something that we need to look at tonight, guys. So, oh wow, that is a beauty. Okay, do you see how well this holds? Even, look at that. Months ago, a month and a half ago, okay, we could have placed this trend line here. And now on the 23rd of August, we see that it came very freaking close, and it didn't penetrate. Actually, it did, but it didn't paint. It came back down, and it left the long candlestick below the trend line, and it dropped for 4 hours. It came back up, it retested with a wick, came back down. Okay, I don't know how close this is going to get tonight about retesting this trend line here, but this is a pretty dang strong trend line, guys. It's at 1164.80. Okay, we're looking at gold, XAU, USD, 4 hour chart. I want you guys to place a horizontal resistance line at 1164.80. I want you guys to see how well it's held over the past few weeks. Okay, and you can also argue this right here. And it broke. I'll put it right here because it looks a lot better right there. Oh, no, maybe down a little bit. Okay. Let's look at some more stuff. Let's look at the 1 hour really quick. You could argue another support line is right here. Where'd it go? Okay. Came up here, broke it, rose, came back, retested, held, came back down, retested, held, retested, held, retested, held. Okay, so it's kind of jumping around these two lines right here. Move this up a little bit. Okay, so gold, that's a pretty nice play to take tonight, guys. Tonight or tomorrow or whenever it comes close to these trend lines. Like I said, guys, whenever it comes close, trade. Whenever it's right here in the middle of these two trend lines, I would not trade. It could do whatever it wants, and it'll probably do the thing that you would least expect it to. So I would wait until it comes close for confirmation to have a better entry on this trade. Okay? Let's look at USD CAD really quick, and then we'll call it a day. Call it a night. 15-minute candle chart. Let's see here right away. I see this nice rise. Beautiful. Okay, what else do you guys see besides this consolidation phase?
It's holding.
It's holding?
Like that trend line. It's not breaking that trend line.
Oh, yeah. It's holding pretty nicely. Holding pretty nicely. Let's see here. There's also support line right there. And the reason why I see that there, or actually, this is better. It's because you see a little argument with these candles. You see the wicks penetrating, but not the candle. You see the wicks penetrating, but not the candle, and you see this argument. It wants to break, guys. It really does, but it doesn't. Until guess what? The girl wins the fight, and the girl always wins the fight. And so it breaks, and it rises. And the guy tries to come back and fix things, but the girl's always right at the end of the day.
Mark,
And it continues to rise. Yeah, what's up, man?
what you think of this?
What do I think of?
Zoom it out.
Oh, okay. Zoom out.
Look at where your line's at versus those two rises.
Ooh, bro, that is a good eye, man. Look how well that line has held these past couple of days. Good eye. Okay, let's
I
get
had
back
this
in.
20 minutes ago. We were talking about all this stuff, and I'm like,
Yeah, I mean, shoot, dude, this is how easy it is, guys. Okay, we could have placed this trend line. Sorry, this horizontal resistance line here. We see that it didn't break. Came back down. Came back to retest twice. It didn't penetrate, guys. So it dropped, and it played around there in consolidation for a couple of days. And guess what, guys? We would have placed that trend line a few days ago, last week, and come let's see, 21st of August. That's Friday. We would came back on Friday, and we would know if it breaks, we'll go long. If it doesn't, we can keep our short play there. And whenever it did penetrate, I would have placed my buy right over here, and I would have caught a very nice value here. Okay, so let me look at the 1 hour chart really quick. That's beautiful. That's beautiful hold. Let me look at the zoom out a little bit. When has it last been this high? Oh man, don't tell me. Okay, guys, let's see when it was actually this high. USD CAD hasn't been this high. Oh my God, this is a 4 hour chart too. Okay, so we can arguably say, I don't want to scroll back and waste y'all's time. This has been the highest CAD has ever been in a few months, okay, possibly a few years. So, knowing that, I would say it has a very strong bullish trend. Okay, it's been rising for the past couple months, possibly past couple years. It has a very strong bullish trend.
since
That means that
August of 04.
what's that?
Since August of 04.
August of '04.
Wow.
Wow. Okay, that's a strong trend line. That's a strong trend. What you guys could do? Oh yeah, I could have just pulled back the day one and the week one and the month one.
That's
Yeah.
what I mean. Yeah.
Yeah. I had a brain fart, guys. But what we can do is we can actually pull out a very strong trend right here. Okay, and I'll do a better one after I paint this. USD CAD. Good for you, man. Okay. and it continues to rise. So you know what? I'm just gonna place another one right over here. Okay, then let's go down a level to the day one chart. And I don't like this one. What I'm gonna do is move it here to the day one. It's a little bit more precise. Okay, and to see how well this day is not a 15-minute candle, it's not 4 hours, it's the actual day chart. Okay, so if you were swing trading, if you were position trading, or just a very boring scalper, you guys can see how well this chart has held. How well this has held. I say it's going to continue to rise. Okay, but that's pretty much it, guys. So we broke down the markets. We talked about our six-figure plan. Let me just stop sharing my screen. We talked about the six-figure plan, guys. Hope y'all are super excited about that. We talked about the just some tips, some strategies, some basic information to help you guys out with your trading skills and your trading journey. But I mean, really quick, do you guys have any questions before we close this all out?
I do. For regarding support and resistance lines, do you put the resistance like where the candle has been highest to like last? Is that how it works? And then
that's a great way to indicate where the high of the day or the HOW, or you really want to indicate where the highs and the lows are in the market. So whenever you place those trend lines or those horizontal support and resistance, you do want to look for those highs and those lows.
Oh, so you just put them in the highs and the lows?
You can put them at highs and lows, and you can also analyze where consolidation phases are. So whenever the market's in consolidation phase, whenever it breaks one of those trend lines, you'll know it'll rise or it'll fall depending on which trend line it breaks. But you can place them at wherever you see. I like to call it an argument, as you can see before. You can place them wherever you see a movement in the market where it's trying to go past a certain level, trying to go past a certain point, and it doesn't. That's where you can consider that confirmation where a trend line exists.
Oh.
And again, that just takes experience. That just takes a little bit of practice to kind of see that in the market.
Oh yeah.
You know, and with homework, dude. With homework, we do have homework now. So the more homework that you do, the better you're going to be at spotting those.
Yeah.
You know. Good question, though, man. What about you guys? Anybody else?
No, it was just good to take in that information from my point of view, at least.
Awesome,
guys.
Wait,
for the six-figure plan, were you saying we should open a live account this week, or just like when we think we're ready?
Oh no, I'm not trying to rush you guys. Open up your live account whenever you guys are ready. You know, if you guys have $1 million in your checking account right now, I think that y'all can, spare some money to open up a live account. But whenever you guys are ready, whenever you guys are comfortable, I actually demoed for a couple of weeks before I was confident enough, or I thought I was confident enough, to open up my live account. So for some of you guys, it may take a couple of days. For some of you guys, it may take a couple of weeks, a couple of months. Really depends on a lot of things. So the sooner that you guys understand the basics, the fundamentals, and I think the most important thing are the indicators, the signals, and the patterns to analyze and dissect these markets like how I did, I would say go for it. Open up your live account, and we'll trade in the live markets together. All right, man?
Yeah, like at this point, like I can understand some of the terms you talk about, and like I've memorized some, but like I can't not like you right now. I can't like see any patterns right now. So like I have to like kind of rely on you right now. But
yeah, definitely. I mean that takes practice, And what I like to do, I like to take those screenshots and post them in the group so you guys can see. Oh, okay, well that's what he sees. Again, I'm not saying I'm perfect. I'm not saying what I see is right. Everyone's gonna see something different. But if we can see something similar, that's what I'm wanting to have all you guys see and help you guys understand better, where we can place those indicators, those trend lines, and those support and resistance lines and stuff. All right, man.
So you would recommend like if I were to open a live account, you would say it's better to do it like once I can actually see like a little bit similar to like what everyone else is saying, be able to like actually see patterns and like predictions of like where it's going to go next. Like, do you think I should wait till I actually have that mindset where I can see ahead? Would that be a better?
That depends on you, man. If you want to, like I said, if you want me to throw you a fish, then we can definitely do that. And that's really like my job is to give you guys support, to give you guys knowledge
Yeah.
where I'm trying to help you guys master this as soon as possible, and that's going to be a huge help. So I don't
Yeah,
mind
yeah.
doing that. That's what I'm here for. But then again, if you're going to be more confident, more comfortable learning how to fish and be able to fish on your own, if you want to wait until that, then you can. I have some guys that are opening up live accounts without even knowing pretty much anything, but they trust in their mentors and myself, and along with my top traders, to help them along the way. So it depends on you. That's personal preference.
Okay.
All right, man. Good questions, man. Anything else, guys?
I don't think so. Just gotta keep learning everything.
Yeah, definitely, man. It takes a little bit of time, but
Yeah, everything good takes time.
Yeah, the more they put into this, the more they're gonna get out, man. So, thanks guys for hopping on. The live recording is gonna be posted on the Facebook page. So for everyone who missed it, no worries. You can go back, record it, pause, stop, rewind, fast forward. And I hope you guys got a lot of good golden nuggets in this call. But we'll talk to each other in the group chat, all right? If you have any questions, just shoot them through the group chat. And myself, along with my top trader, is going to help you guys understand everything as fast as possible, all right? So thanks for hopping on, guys, again. Appreciate it, and y'all have a great rest of the night.
You too.
All right, guys.
Yep.